Today, we take a closer look at NVIDIA, a company that currently holds a leading position in global AI infrastructure. NVIDIA has just delivered a very strong quarter, demonstrating strength in both scale and profitability. In Q3 FY26, NVIDIA reported $57 billion in revenue, up over 60% year-over-year, indicating that growth momentum remains robust. The data center segment continued to be the primary growth driver, reflecting sustained AI demand. More importantly, net income reached nearly $32 billion, up around 65% year-over-year, showing that profits are expanding faster than revenue as high margins and operating leverage continue to take effect. By segment, compute and data center remained dominant. Notably, networking surged 162% year-over-year to $8.2 billion, an exceptional growth rate. This reflects strong demand for high-speed networking solutions, such as InfiniBand and Ethernet, essential for large-scale AI clusters. Compared to last year, compute still accounted for roughly 75 to 78% of total revenue, confirming AI and data centers as NVIDIA's core engine. Meanwhile, networking expanded in both absolute revenue and share, signaling deeper AI infrastructure adoption beyond GPUs. This chart provides a long-term view of NVIDIA's revenue evolution, clearly highlighting an inflection point starting in fiscal year 24. During fiscal year 22 to 23, revenue growth slowed and even plateaued at times, reflecting global economic weakness and a semiconductor down cycle. However, beginning in fiscal year 24, NVIDIA's revenue accelerated sharply, driven primarily by the data center segment, as enterprises and big tech ramped up AI infrastructure investments. Importantly, this growth has been sustained across multiple quarters, indicating a structural shift from AI experimentation to large-scale deployment. Other segments, such as gaming and automotive, while growing more modestly, continue to provide stability and diversification to NVIDIA's revenue base. This table highlights NVIDIA's growth quality and concentration. Company-wide revenue grew 13.7% quarter-over-quarter. Data center surged 19.6% quarter-over-quarter, well above average. More importantly, data center CAGR reached 104.5%, compared to 67.1% for total revenue. This confirms NVIDIA's growth is highly focused, centered on AI and data center infrastructure. This chart shows a clear shift in NVIDIA's geographic revenue mix. Starting in fiscal year 24, the US market surged, becoming the main growth driver as big tech companies ramped up AI infrastructure spending. In contrast, revenue from China has weakened in recent quarters, primarily due to export restrictions on advanced AI chips, limiting NVIDIA's ability to ship its highest-end products. Other regions, such as Taiwan and Singapore, continued to grow, but played supporting roles. Notably, from Q3 fiscal year 2026, Singapore is no longer reported separately, as NVIDIA now classifies revenue based on customer headquarters rather than data center locations. This chart shows how NVIDIA's growth is being strongly translated into profit. From $57.0 billion in revenue, NVIDIA generated $41.8 billion in gross profit, up about 60% year-over-year. Operating income reached $36.0 billion, growing 65% year-over-year, while net income rose to $31.9 billion, also up 65% year-over-year. This indicates that as scale expands, profits are growing at least as fast, supported by strong operating leverage. Looking at these three charts together, it becomes clear that NVIDIA's growth is increasingly driven by profit expansion rather than scale alone. From fiscal year 24 to quarter 3 fiscal year 26, revenue rose sharply, while gross and net profits grew even faster, signaling a clear improvement in business efficiency. In terms of growth rates, revenue increased by 13.7% quarter-over-quarter and 67.1% year-over-year, while gross profit grew by 14.5% quarter-over-quarter and 72.2% year-over-year. Most notably, net profit expanded by 16.9% quarter-over-quarter and 87% year-over-year, indicating that each additional dollar of revenue is generating more profit than before. This dynamic is clearly reflected in net profit margins. After weakening during fiscal year 23 due to macro headwinds, margins rebounded strongly from fiscal year 24 and have remained around 55 to 57%. NVIDIA's high net profit margin is not driven by AI demand alone, but also by its dominant position in the high-performance data center GPU market. As of mid-2025, NVIDIA commanded approximately 75 to 85% market share of high-end AI GPUs for data centers, giving the company stronger pricing power over competitors, since customers prioritize top performance and ecosystem support. As large-scale AI deployments continue to grow, this market dominance helps NVIDIA sustain above-industry profit margins and generate profit growth that outpaces revenue expansion. Looking at NVIDIA's operating expenses, both R&D and SG&A continue to grow, but at a controlled pace. In Q3 FY26, R&D reached approximately $4.7 billion, up around 36 to 37% year-over-year, while SG&A stood at about $1.1 billion, increasing roughly 20% year-over-year. In total, operating expenses rose by about 32% year-over-year, well below revenue growth of over 60% during the same period. On a quarterly basis, R&D grew around 8% QoQ, while SG&A increased by roughly 4 to 5% QoQ, indicating steady but contained cost expansion. Importantly, this pattern did not emerge only during the AI boom. This chart shows that NVIDIA's reported revenue has consistently met or exceeded market estimates. This reflects strong execution, as the company not only provides optimistic guidance, but also delivers results that align with or outperform expectations, reinforcing investor confidence over time. A similar and even stronger pattern can be seen in non-GAAP EPS. In recent quarters, actual EPS has frequently come in above estimates, indicating earnings are improving faster than initially anticipated. When earnings per share consistently beat expectations, NVIDIA's stock becomes increasingly favored by investors, supporting a premium valuation throughout the AI cycle. The market remains highly optimistic about NVIDIA in the current environment. The average price target is around $260, implying nearly 37% upside from current levels, with further potential if AI investment continues to expand. More importantly, the majority of analysts currently rate NVIDIA as a strong buy, reflecting strong confidence in the company's market leadership, execution capability, and earnings quality. NVIDIA's consistent ability to meet or beat expectations has supported strong investor demand and a premium valuation in today's market. Thank you for watching. The information presented in this video is based on sources believed to be reliable and is for informational purposes only. It does not constitute any investment recommendation or advice.